Hi guys, in this video I'm going to talk about several reasons why I think Revolve Group, ticker symbol RVLV, is a good buy now. More specifically, I think it will go up by more than 20% soon. Of course, this valuation is purely based on my own estimation using my own valuation model, so please be guided that this is my personal opinion on this stock and it is not a recommendation. As always, please invest at your own risk and make sure you do your homework before you start investing. Hi guys, my name is Ethan. Welcome to my investing channel. Before I begin, this is a high risk, high return growth stock, so I have only bought less than 5% worth of my total portfolio value. My entry price was $17.75 per share, and I believe Revolve shares will go up to at least $21 to $22 per share, roughly 20% return in the short run. I think this is a rather conservative upside that I have estimated. It should go up much higher, but since it is a speculation, I shall leave it as it is for now. I personally think that RVLV is a high risk share, but the fundamentals of the company is rather spectacular. And why do I think this is a high risk share? Mainly due to the short listing period of the share, hence limiting data we have, as well as the highly competitive industry that the company is in. Fashion industry has low entry to barrier, which means anyone can start a fashion retail or an e-commerce fashion retail with minimal capital. Fashion has been in the industry for decades. Nothing is new about them except the ever-changing fashion, which is why they are no longer a hype since their listing. But online businesses are catching the eyes of the investors again as the economy is getting better. And due to the pandemic, many people have been staying home, which makes online businesses become more attractive. E-commerce is taking the market share of US total apparel sales by 4 to 5% on a yearly basis since 2017, based on the data published by the US Department of Commerce. And honestly, I will not be surprised if the pandemic has helped accelerated the transition from physical retail outlet to online retail business. So, on a macro point of view, this favors the e-commerce businesses, while the micro point of view, what I like about Revolve Group specifically is that they are changing the way fashion retailers do their business. Allow me to elaborate more. Do you know that the company is founded by two gentlemen with no fashion experience, but now the company is worth over $1 billion. So how can two guys do it? Based on their chief branding officer, Reza Generona, everything the company does is stemmed from data. So instead of following trends, going to fashion shows for ideas, the company actually utilizes its big data to predict trends, inventory levels, and many more. The company focuses on niche designers for specific group of customers and provide detailed feedback to the designers as to exactly what the customer are looking for, such as more mid-length dresses or a particular shirt color. This apparently is proven and the sales skyrocketed. She also mentioned that if they take risks on trend and can see it doing well, they can quantitatively distinguish how future styles will sell. So for a number guy like myself, I definitely love a company that focuses on numbers and statistics, and the application onto fashions amazes me. So from a business model point of view, I'm sold, but at the end of the day, numbers don't lie. So I will analyze their financial numbers to make sure their business model works as they have described. Now, the reason to buy the stock. The number one reason is that Revolve Group stock price will continue to go up is because they are still enjoying a revenue growth of 20% per annum despite their size. Revolve revenue is around $600 million in 2019, and I'm estimating their revenue to land around $670 million in 2020. This is lower than 20% growth for 2020 because I think they are badly affected by the ongoing pandemic. But the company said that they are seeing growing demand and increased revenue in the last quarter, which is shown in the month of June, where they achieved positive growth in year-on-year sales. Net income and EBITDA is also higher than last year despite lower sales. So what it means is that cost-cutting measures has been put in place, and that seems fine to me. If you refer to their earnings presentation, they will show you which categories are generating more traffic and which product is more popular during the stay-home policy, which I think is what put them ahead of their competitor. And for reason number 2 is that Revolve enjoys a juicy gross profit margin of around 52% as compared to its peers of around 44%, except for Rail Incorporation, which has about 64% gross profit margin. But that brings me to another reason of why Revolve, in my opinion, is better, and that this is the most obvious reason of all. Revolve is the only profitable, fast-growing e-commerce retail company among the other competitors which are listed. As for the final reason, it has nothing to do with the business itself, but more of the share market. Looking at the chart and also the overall market conditions, we seem to be in a correction phase now. Hence, I think the shares has been oversold, which leads to my decision to purchase the share now. The other support level is around $16.20 per share, which is about further downside of around 9%. If the Revolve shares did indeed decline further, the only sensible thing to do is to accumulate more. Now, some of my friends who have purchased clothing using Revolve platform and find that their clothing is inferior or hideous. Some of you may also experience the same, but I would like to remind you that Revolve also collaborate or partner with many other brands to provide varieties of selections. I've always said the financial doesn't lie. If you look at their financials, they're growing at 20% or more on an annual basis. It means that there are still a lot of demand for their clothing around the world. So, your opinion or my opinion on what their fashion is doesn't matter as long as they remain growing at the same pace. So, before I share my exit strategy, I would like to share my 2 cents on the market development over the years. This will eventually link to my exit strategy. There is always a theme running amongst the investors. The theme could last from one day to few months. For example, current theme is EV, electric vehicles, which has been running for quite some time now. I personally think electric vehicle shares are overbought. The reason is because they are the favorite amongst investors and too much fear of missing out going surrounding EV shares. But what does this mean from valuation point of view? I believe hype in the market allows one to be more bold in the valuation because there are many investors going crazy for EV shares now. Put yourself in a situation where you wanted to buy something really desperately and you finally found it, but it costs more than its usual pricing. Will you still purchase the shares? If yes, you belong to the investors group that contribute to the overvaluation of share price such as Tesla, NIO, or Workhorse. Now, after analyzing the qualitative and quantitative side of things, as my usual practice, I will input my view, or rather my assumptions of the company into my valuation model, and the result is a 20% upside potential to $21.50 per share. Again, I cannot emphasize enough that my model does not help me in terms of timing my entry or exit, so I need to rely on other methods, which is the technical charting. Buy support and sell resistance. Therefore, as mentioned in my reason number 3, if the shares continue to drop, I will purchase more but will not exceed 5% of my total portfolio value, because diversification is core if you want to stay in the game for a long time. And by the way, if you wish to obtain my valuation model, please subscribe, like, and leave a comment, and I will PM you privately. So here is my exit strategy. If the shares shoot up to my expectation of $21.50 per share, I will sell half of the share and leave the other half for a further upside of around 20%, which is at $25 per share. Then I will exit altogether. The reason why I increased the valuation by 20% is that I believe if the share price were to climb up to $21.50 per share, the stocks will garner a hype and I will be able to further price in the 20% upside. Now, you might ask if I'm afraid of missing out further upside of the shares. The answer is simply no, because $21.50 per share is my target price, which is derived from my assumption. I cash out the 50% of it to be able to also participate in further gain if I was wrong in my assumptions. But I'm also limiting my loss at the same time. Many retail investors will chase after the stock after the price have soared up to $21 per share. Those investors deserve my thanks because share market is a zero-sum game, which means if I win, someone must have lost. So yes, if next time there are people telling you to chase for a higher high without sound research, please express your gratitude to them, for they are going to buy you lunch without them knowing. Anyways, after all the good things that I have mentioned about the company, now it is time to consider the risks facing the company. First is if they are no longer in demand, their so-called data-driven fashion does not work anymore. For this, we will be able to access by following up with their earnings report consistently. As long as they are still enjoying a good growth in their revenue for subsequent few years, while e-commerce is capturing more and more traditional apparel's market share, I will be fine with my target price of $21. Number 2, any new competitors with better business proposition in this field, I will have to reassess which company worth my penny. So far, I have not seen anything particularly threatening to Revolve business model, so this is fine as well. And number 3, the relationship between US-China worsened, which leads to a hike in tariff for imported textile goods from China to the United States. As many Revolve products are manufactured in China, US hiking the tariff for imported goods from China will definitely impact the price of the goods of Revolve. They can either absorb the tariff or pass through to the customers. Either way, it is a bad sign for Revolve. For now, some of the tariff have been introduced but was reduced as a result of Phase 1 trade deal. So I gotta pay attention to the development of trade war in the subsequent months. And finally, when will the bubble burst? For now, I believe the bubble is well contained. I think I will do another video explaining why I think the current market can sustain in the short run, provided that the November general election does not create too much uncertainties. There are some differences which is worth mentioning about current market conditions as compared to the 2000.com bubble. All this will be in the next video as well. So that concludes my video about Revolve Group, ticker symbol RVLV. If you wish to know the progress, whether I make or lose money, whether my strategy works as I have planned, please subscribe and stay tuned. Thank you and bye bye for now.